Hey, good morning. It's David Sanchez here. Today is September 13th on a Monday, 2021. So just wanted to send you a quick message. Got this question asked quite a few times over the weekend. And even I've been running a campaign for a listing that I have for sale that's in Zephyr Hills. And that particular one is in mobile home that sits on 4 acres. Good piece of, good piece of property, has a lot of prospects that can be done. Very great location. And, the good thing is that, you have two lots that are on there, one consisting of 3 acres towards the back and then 1 acre in the front. But nonetheless, the question that I've been getting asked is, where we had an offer for someone that put in a bid for FHA. First thing that caught my mind was because of the list price that we have, that one did not meet the criteria for FHA on the loan limit. So their offer was over the FHA loan limit, which for FHA, you need to have 3.5% down. So looking at the numbers of the 3.5% down from that offer that they put in, which was full asking price, it exceeded the FHA loan limit. And that particular buyer did not have the money to pay the difference. So basically, it was about $10,000 to $15,000 off from that, which the buyer again did not have the extra money to come up to pay for that because they still have their down payment, the 3.5%, and they still have their closing costs with the loan and the prepaids, which are taxes and insurance that have to be paid up front, to build up that reserve. So that deal didn't work. But they could have gone conventional, but conventional would have meant that they would have to possibly put more money down, anywhere between 3 to 5%, depending on what they're qualified, could be up to 10%. Again, all based off of qualifications. But that being said, they could have gone another route, which would have been USDA home loan. A lot of people haven't been using that loan. I've done a couple in the past with some clients. Not a whole lot because majority of business is being done in what we call tract homes or more subdivisions, not necessarily in probably some of those areas. So what USDA usually consists of is a rural area outside of the city. Doesn't have to be farm area, it just has to be designated as rural area based on the USDA Loan Map. So that's something we're going to share with you so you can look at the tool. But some of the benefits that it has is that it's 100% financing, okay? This is the property that buyer put in an offer on the listing. It was listed at 390. And again, it just didn't meet because on the FHA loan limits for Pasco was at, let me see here. For Pasco County, and this is something that people probably kind of overlook, but here's the limit, was 356. That house is listed at 390. Now with FHA, this is another thing, what we call a hack and that you can use. So FHA does allow you to buy a 4-unit property, and you can see the difference. So if it's single family, 1 home, townhome, condo, 356. Duplex, so 2 units. Triplex, obviously 3, and then quad is 4 units. So basically what you can do is you can either buy a property like that, live in one, rent out the other, would almost pay for your mortgage. And, or the bigger you go, it probably would pay off the mortgage considerably, and then you have money left over. But going back to the USDA, FHA loan limit is 356, right? So with this property, we have here on Chansey Road. And if you're unsure about this, what you can do is go to USDA Loan Map. And be careful about what link you click. So this one is the one that I use all the time. So it's a .gov website, not a, any other website, that you would go to, like Neighbors Bank or something like that, USDA I just go straight to the source. This will open up property eligibility. Click go. And then you'll see on the map that's here, says address is located in eligible area. This other area here is not eligible. This will be considered urban right here. So if you're familiar with the area, we got Live Oak Preserve, which is New Tampa. We got right here, which is County Line Road. There's a Target that's right here. State Road 56. You got the Sam's Club that's there, and then Wiregrass Ball. This goes all the way out to Meadow Point on the north end, but it's actually right here in the south side of that, all the way up to 54. So all this area has been designated now as urban development. This is the rural area. So use this map for that. And let's see, the other thing you definitely want to take a look, because you see this part says income eligibility or income limits. Those are important things to look at, just for the fact that, USDA is 100% financing that you can get qualified versus FHA, again, 3.5%. Conventional can be as little as 3%, up to 5, 10, 7%, whatever you want to put down. So this reduces your expenses a lot, out of pocket. Still have your costs that, for inspections and for appraisal. But the other thing too is that if this particular home, just as an example, if it appraised more than what the asking price is, you could potentially have the ability to finance your closing costs and your prepaids into the loan, which is a little different than some others. USDA, like FHA, we just looked up, doesn't have maximum loan limits. It's solely based on, what they can qualify for, unlike FHA and conventional, which do have loan limits. The rates are very competitive. The mortgage insurance as well is very competitive, for the premiums. Some of you may not be aware of the mortgage insurance premium. So what that means is that if you default on the loan, you're paying for the mortgage insurance premium that benefits the lender for the loan, not for you, but for the lender. So if you default, they get paid off that insurance policy because the loan has defaulted. They get paid in full. It's secured, and this is what lenders had been doing before the mortgage collapse, but even after, where like FHA, it's for the life of the loan. Conventional, probably about 6 to 8 years, it would stay on there and then drop off. USDA, you still have mortgage insurance as well, but it's the premiums are less upfront, but also on the monthly amount on the loan as well. We already went over where you looked up on the USDA map to locate to see if it qualifies. And then the map is constantly being updated each year, just again, because a lot of these developers are buying up large tracts of land to build new subdivisions. So over time, a lot of this land, USDA will still be there, but the question is how much longer, for Florida still has a lot of land to be developed, but over time, this loan will go away, just because of all the development that's going on. But I think this would be a great loan option for some of you. Again, it just depends on what you're looking for. This is a house in particular that's more outside of the area. I had another good friend of mine reach out to me this weekend about the same thing. I mentioned the loan to her as well to look into. That property's in Plant City. I said, hey, it's a A+ deal for what you're getting. Take advantage of it. See if you can qualify for the loan. Keep your cost as low as possible, because then whatever money you don't have to spend into the home loan, you can use that, save it, or do whatever you want to do with the house, or buy something, buy furniture, appliances, whatever. But just wanted to share this information with you guys. If you got any questions, I do have a couple of lenders that specialize in USDA, because you want to be careful because of the loan, not loan limit, but with the qualifications of the loan. It is based off of income because of the household size that would be determined. You know, who's going to live there, not so much who's on the loan, but the size of the family. So you want to find a qualified lender that knows, you know, the little details of that stuff. So that way you don't go through thinking, I'm going to get qualified and then not get it at all with some of these other lenders that say that they're USDA qualified. They're just pushing loans through. So if you need any recommendations, feel free to reach out. I'd be happy to share those with you guys. Thank you again. Bye-bye.